offices were shut down and we had to run around setting up 3-4 offices. We were already at the same time the plug was pulled. One of our Bombay office partner along with the team decided to walk away. That also happened together. We were just getting solid on Japan, so I took charge of Japan. I ran like mad, and people, they kind of believe, because you have to get the belief back in, because your own belief is shaken in yourself. Jo dar gaya, samjho mar gaya.
Yeah.
And that translates to whoever is scared is going to definitely die. If you want to get into practice, don't be worried. It's first of all, you're a CA. You're not going to starve. That's guaranteed.
So, hi everyone, welcome to the Finance Story LinkedIn Live series. So, 2024 and onwards seems to be a fantastic time for India, and it's very important to understand what growth can CA firms expect and how big can CA firms think and what can they actually achieve. So, to help us get a perspective on this, we have with us Ajay Sethi, founder and managing partner of ASA. ASA started in 1991. And fast forward to 2024, they are a leading professional services firm in India with over 1,000 plus team members, 33 partners, and they've recently joined the Bakertilly network. Can you take us back to 1991 and tell us why and how did you start ASA? Did you come from a family of CAs where, and that's how the idea came up and you said, hey, let me go for a practice?
Had ambitions and ideas. My desire to do CA wasn't there. It was a fluke. I come from, our parents of our generation, they come from the colonial background. So for them, a job, knowing your English well and getting a good job, these are the two aspects which were important to my father. And from his perspective, you become a doctor, engineer, architect, and if you're not good at anything, you become a chartered accountant or lawyer. That was my dad's perspective. And I wanted to do business. So obviously he didn't like the ideas. He thought another person was going to waste time and become a club member and then be seen playing rummy and bridge and all. I kept pushing my dad that let's do this, but he avoided the issue. And finally, a friend of mine pulled me. He was doing CA, so he pulled me into training, and I went and did the training. And then I gave my exams, and then I qualified, and then I was pulled in Andersen. And when I joined Andersen, which was because I was on the merit list. I'm not boasting, I'm just telling you facts. So I was on the merit list, so they pulled me in. And I spent some time there. And I thought that, yes, now the profession is changing, and this is a great time to do a venture. So at the age of 26, if you ask me, what we call startup today was what me. I have no chartered accountant in my family. My father was a banker, as I let out earlier. And I thought, since I'm an accountant, let me get into practice. It'll give some release to my entrepreneurial desires. So I started from Delhi in what is called a barsati or rooftop room with asbestos sheets, 8 by 10 room, and no idea that it will come to this point. If I was to say that I had a clear vision that is going to come here, I must confess I didn't. At that time, I was newly married. I married early. The whole idea was to impress my wife that I will also make some money with my great intelligence. Well, I don't know whether I made or not in the first 3 years, but I scared the life out of her because I blew up all her collections very quickly. So that's it. That's the start. But it has moved forward very well. I found like-minded people. I think my biggest skill actually is that I'm able to spot wonderful people and I'm able to convince them to do things together. And in all fairness to me also, I think I'm also very fair to my partners and the people around me that I don't try to pull fast ones. Honesty, I think, has paid me in the long run.
I know it's 33, 34 long years. So if you want to go back, rewind a little bit and take us through some key developments that shaped the practice. You said the first 3 years was scary. Can you break down the key factors that led to the growth?
So I think, actually the first 3 years, if now in hindsight, I mean, when you do a little bit of success, and I'm not saying that I'm successful, I'm simply saying when you do success, then when you look back, there's always nice stories to pick up, which is not the case when you don't do well. But I think the first 3 years were the best learning years because they grounded me. Coming from Anderson, I suddenly realized it meant nothing. The real world is different. Competition was high. I had no visions about the profession changing or not changing. Forget that. I just had to survive. So I met some very interesting people as I went along. Uh, And I do want to mention there was one, of course, I owe a lot to Mr. K.N. Mimani, EY. He guided me. He gave me little work, but what he did was he guided me. And that guidance was very valuable. And as luck would have it, there was another Marwadi chartered accountant, Mr. B.R. Maheshwari, president of the institute. I went to him, sir, give me some work. He says, I don't have much work to give you, but I'll give you some advice. So I thought, here, somebody is trying to make a youngster get out of the room. But it was very valuable advice. He told me that, Ajay, listen, I'll give you three tips. One, if you are not changing your shoes every 6 to 8 months, means you're not running enough. At that time, you had to go in buses. I didn't have the privilege of moving around in just cars. And you had to do physical meetings. Second, he said that what is now called in a famous movie, all is well factor. He says, don't discuss your problems outside. You have a problem, sort it out yourself. Go to your family, say everything is building up well, all is well. Things are, and if your clients ask you, or colleagues ask, don't complain, because complaining is negative vibe coming back to you. And third thing he told me is, never fall for this trap that you will take the lower fee today and one day you'll become great. So these are things which he told me, which stuck in my head till date. And this is one of the best advices I can give to any youngster, that you will start, it'll be tough start, and there are ways to overcome. We'll come to those issues also. But some of the things, changing steps in my movement up as a firm, one was the first thing was realizing that I didn't know everything. I was good on taxation side at that time. And I knew that you can't just build up a practice as a generalist. That was my feeling on the matter. Maybe Andersen had influenced me. So I had very clear thoughts that to bring in good partners. I think that was the wisdom which helped me a lot. I started looking for partners right from day one. And I got fantastic partners. Most of them are still here. My first partner, Rajiv, is still here. I mean, most of them, somebody is 25 years, somebody is 20 years, somebody is 15 years. So the idea was respecting their work and letting them run their domain separately. The second thing we did was we did not go for this model of a cost center. You know, you kill and you eat what you kill kind of a concept. I don't believe in that concept. I think if you come together as a family, then you must have a sharing ratio, and it should be from the global pool, not these split false partnerships. So that was the second learning. Then we went along. I also realized that Indian practices were not growing very well, and I realized what was causing the trouble. Family-owned structures. People were going to the big four, whereas I personally, even the family-owned structures I met, I found them extremely high on wisdom and very good in their work. But the person was not feeling that he's going to grow there, so it was not merit rising in the organizations. And if somebody was growing old, he would be there till 80, 85, 90, and then everything would collapse. Some of the fantastic firms of my era have all disappeared or just gone away. No succession planning. So as I went along, the other lesson I learned is keep family out, at least in my model. And I know some very well run today's family-owned structures which are run fantastically well practices. So I'm not decrying anybody. I'm simply saying in my model, I picked up non-family owned structures, clear policies to run it, and everybody retires at the age of 65, and no exception for the founder. So when you have linear rules, people believe in you. Because if you are just going to keep rules which are going to be self-centric, then it defeats the very purpose. So these are some of the initial learning. Then getting into a foreign market, which was Japan for me. We got into Japan and we understood how much honesty matters in Japan and what straightforward being all about is. You don't have to give a perfect answer all the time. You can turn to a client and say, I need to research this and come back to you with sensible answers. We understood global business at a very young start. I think it was only 5 years into the business we understood this. Then tying up with Japanese counterparts, looking internationally and tying up with other people. So we understood how to partner domestically and outside for self growth and for the other person growth. So, like this, there were lessons. I think amongst the more interesting lessons which I picked up was while I was building up all these great ideas, I also realized that one day I have to vacate this, what I have created, because that was the game plan, which is still the game plan. So if I I could go rogue. I was 35 when I started speaking about changing the name from an individual to an abbreviation, taking away the personality out of the equation. So I was 35. So I had, when you're 35, you never imagine you'll ever grow 60 or 65.
Yeah.
And I have grown now. I'm turning 60 this year. So when you look at this whole thing, I realize it's better to have a check and balance system on the managing partner also, including myself. So I created 28 years back an independent board of directors, which are people, stalwarts, advisors, who cannot be swayed by my word or anybody's word, people who have done very well in life. And I report very clearly to them what I have done, what I have not done, and the board reports to them. That will be the check and balance for my successors as much as on me. So you see, a very unique structure fell into place. And the beauty is, while we hadn't tied up within any international network earlier, 70% of my clients were foreign companies. Now that's a paradox. I guess we would be amongst India's good firms, maybe top 10, I suppose. But none, without a network being there, speaks volumes of the effort we put in and the partners and all, how we came together with a single mission. So I think a lot has to do with clear thinking and planning for the future.
So can you just break down a little more?
90s were more or less a period of experimentation. We were just experimenting with ideas.
Yeah.
As people were coming in, I was saying, I won't do this, you do this, we'll do this. We'll worked in the basement, then we were thrown out of the basement, and so many interesting things were happening. Experimentation word describes the 90s period for us. We started in 91. 2000, we rode the wave with the market. We were getting more settled, so foreign clients started increasing, with Japan leading the way in a big way. Our visits started going up. Board got created. The importance of budgeting systems started falling into place. So we started planning with SOPs in mind. The processes started guiding our thinking process. And 2000 to 2000 and I guess 2005, let's say, to 15 was the period when we went into massive expansion mode. That's where we started thinking that why are we thinking in terms of small components? Why can't we think multiple? So we went for mergers. We expanded the portfolio. We looked at things very differently. Uh, Giving and shedding shares, we realized is not a big deal as long as the pie keeps on expanding. So that was the period of very fast expansion. And 2015 onwards to a period about now, I think we have been playing both. Now we are doing everything at the same time. We're experimenting with new ideas, market is changing. We are consolidating at the same time whatever we had done earlier, what we should do, weaknesses, throwing away commoditized products, how to replace with high-end services. So we have started playing with everything at the same time. And as our clients were going international, the need for an international network was felt. I mean, that started coming into play. So, which I can expand if you want it later. So we started saying that, listen, it's time to go with a bigger flow as we so as you can see, whatever we had been doing in bits and pieces, processes, experimentation, consolidation, everything is fallen into place. And now, frankly speaking, I'm doing so many things at the same time that I'm wondering why I didn't keep the age at 60 to retire rather than 65.
Think of ASA, it has a very strong recall value. Do you have a strategy in place, or it's just good work that has produced outcomes like this?
No, it is good work, but the thing is, a brand recall value. So let's pick up a simple brand. Let's pick up market related Sony or FMCG goods, something like Colgate or something. What is the brand? What is the brand doing to you? It is only giving you a comfort. If I buy Sony, it's a great TV, it's not going to go bad. You don't pick it up because your neighbor has it and therefore I must have it. That Onida ad of earlier years, owner's pride, neighbor's envy or something, is not the main thing. Sony gives you the comfort. Why do you buy an Apple phone? Of course, there is this thing about you can show it, but also gives you the comfort. It's very simple to use. And if you're using Colgate or something, it's a thing that my teeth are safe or whatever. Every brand is based on a factor that it causes reliability as the main emotion. It gives a trust factor. And that is what we aim for, that the people we work for, they should be able to feel. And that's our attempt. It starts from the people who are within our organization, they feel Their careers are important to us. We are not using them as clogs in the machinery.
Yep.
Their careers are important. Their growth is important. Their learning is important. This is a very important thing for me. It's my obsession. Day in and day out, I keep on looking at the processes which deal with people. And the second part is the people you deal with. This is your client delivery. Are you just looking at their pockets and are you treating them as ATM machines? Or are you looking them that this could get them in trouble and I must highlight it to him? It doesn't matter whether I get the job or not. Or even if it's going to reduce my work scope, but this is a shorter route. When you cause that feeling into the other person that he can rely on you, the brand recall value goes up because brand is nothing but a joint thinking process of many people. If you go somewhere and somebody says, I know ASA, and the other person says, oh, I really think I can trust these guys. That's how brand builds up. It's nothing new to the brand. So it's about how you deal with people and cause them to feel that they
Yep.
can trust you. You're not going to pull a fast one. There are many CFOs I meet who say we have never heard of it, but it doesn't matter to me. Once you know us and once you get used to the way our partners have a personal touch, they keep on touch, they will go out of the way. Work is very important for us. People have they have difficulty to adjusting to anybody else. People who work with us, they go, they join the big four, and many a times they come back because they feel we just can't adjust to any other working environment. So it's a lot to do with how you deal with your people, not how you market to your people. Marketing has only a door opening value.
What are the biggest challenges that you have faced in your journey? Okay, and what are those? And what are the challenges you face even today in your journey running a firm? So what is that?
I think handling a bunch of partners who are not related to me and coming from 19 different states, that I think remains my biggest challenge. Much as they are respecting to me and this thing, but
Yep.
in order to balance, I'm a creature who likes to carry people along. I don't want to force people to do
Yep.
things, and that's a personal challenge because when you have this nature and then you have these ideas bursting around you, this is one of the challenges. But in the past, I've had some very interesting challenges. Once we were running our offices, and we had offices in Delhi in Shapurjat, and suddenly MCD declared that all offices which are in non-commercial areas, and Shapurjat was technically one of that, will be shut down. So offices were shut down, and we had to run around setting up three, four offices. We were already 150 or 200 people then. So suddenly moving people around was a challenge. At the same time, the plug was pulled. One of our Bombay office partner, along with the team, decided to walk away. That also happened together. And these partners have been, and then at many times, partners whom you're close to, whom you've developed personal vibes, they will leave for reasons which are fair. There's no human nature doesn't mean somebody is right or wrong. It simply means something happens and it goes its direction. So without getting into the right and wrong, these are challenges. It'll happen to any practicing
Yep.
professional because all you're selling is your time and your
Yep.
mind. Your
Yep.
ability to express your knowledge into simple words is what the client wants. And at some point, your partner will feel he could play better with a different idea because he feels that you're restricting him, and that's fine. He will do it. And these are the things which have been challenges. And all these challenges are fought with one simple step. I take my people into confidence. So the biggest challenge was the MCD problem. I mean, it was like a nightmare, and the Bombay going down and one partner deciding to leave at the same time. That was the one of the big ones I faced. And only thing I did is I called everybody, told them that I am doing this. This is the way I'm going to do it. This is my possibility. But if you leave, I will not feel bad. But I'm telling you exactly what I'm doing, and I'm going to give you a report every week. And I'm going to run and try to sort these problems myself. So I was running, there were 5 locations we had created. Every day I would take a spin of every office. We were just getting solid on Japan. So I took charge of Japan. I ran like mad, and people, they kind of believe because you have to get the belief back in because your own belief is shaken in yourself.
Yep.
So I played with that idea. And trust me, it is the most simple technique. You must learn to talk to your people in a transparent manner. It's something I practice till date. It works very well. And we unnecessarily feel this hiding behind and doing information. Many of my partners complain that in my effort to be transparent, I can sometimes be over transparent, but so be it. I'm more comfortable with that than the other way around.
Why Japan? You said you also say that on your website you all have six desks in international offices overseas. Everybody wants to get international clients and serve international clients. The margins are better. At India, it's better. So can you just tell me how do you foresee it, and what opportunities can we tap on?
So remember, when you are reaching out to a client, a target client base, the
Yeah,
issue is you should very well define what you want. So just because everybody is chasing foreign clients, I wouldn't recommend any professional say, "Oh, let me also get because the margins are higher," because the
yeah,
skill you may carry may not match what they are doing. The skills we are carrying, foreign exchange, my starting training from Anderson, my
yeah.
international tax exposure, what I carried was very focused, could have given me them better results and given me better results. So we focused there. But international market, uh, today's date, first coming to domestic market is very developed. The Indian companies, at least the bigger ones in the mid segments, are no more saying that, oh, we'll just pay you this much. You tell what you're going to do and you tell what you're going to save, and therefore what your fee will be. So the market dynamics are changing. So I don't disregard. I mean, my Indian client base has increased at a phenomenal pace, and I
Yeah.
think we add tremendous value with, service like forensic, which we are doing a huge amount of work for very large pharma companies and other companies. But you must define the area which you think is going to add value, and that I think is the starting point. Now, going to international clients, it's a money spending game. So if you think you got the skills and all, remember, it's not going to just happen by a visit or something. You must have a game plan to connect it in India. So let's say you want to work with Netherlands. Then what is the chamber out here? What are the people out here? Your interaction with the people out here. You're planning a visit, finding out which companies you can make the chap. So it's a two-way investment, and then you must have ground some boots on the ground. You just can't. Today's date, of course, we are very lucky that we are part of an international network, which is a fantastic Bakertilly. We have met the people, we have loved the people. It's a fantastic network, very people oriented. Now, with 706 countries covered and 42,000 people, 706 offices and 140 it's a just a perfect place for us to be. So now we have that advantage. You may not have it, but if you identify a one or two countries, you can choose a fellow professional there and start a smaller game to go with. But you must have skills which attract those people.
So take us on a specialization versus general practice. If you could, yeah, elaborate on this aspect.
Yeah.
Yeah.
So depending on where you are, if you are going to be, see, there is a room for general practice in. So first of all, general practice in a small town versus a big town. If you're in a small town, you have no choice but to be a generalist for the time being. I'm talking tier two and tier three cities because they'll expect you to have an answer for everything. So that's the starting point. In big cities, also, depending on what your target audience is. Now, they might be clients, let's say mid segment and small segment players, who would want to deal with only one person. And today, I mean, chartered accountants, end of the day, and lawyers and other fellow professionals, they are very knowledgeable people. It's not that it's difficult to be a generalist, and they know when to plug in a higher talent. So as long as you have the skill to know when to take it to a specialist and when to take your client through the issues, you can play with it. But remember, your target audience should be clear. You cannot be a, if you're targeting clients like Nestle and HLL, you can't be a generalist. But if you're targeting small segment, because remember that's a market also. Restaurant chain coming up, a startup is coming up. They want good people and they don't want to go to very heavy, expensive firms. So there is a room for you to play, but then you should identify it. If you're going in that segment, then being a generalist is pretty good. Specialization is the name of the game for the future. It has actually evolved if you see it. If you want me to take you through the evolution process, I can briefly tell you in very
Yeah.
quick terms.
Yeah.
When
Okay.
I started the practice, there was this, and the generation before me, when we came into the office as article trainees, the first job we were given was a directory, telephone directory, and a calculator. And we were told, total up the first 10 pages or something. It sounds very simple. It drove you mad. You'll do the total of the first page, and the guys had it written, and you'll go mad, keep on trying to get that one or two which was going out, and it won't work. And only thing the basic thing you were trained to do was fast calculation on the calculator, because that was expected from you. Now imagine the generation before me, which was given a directory without a calculator. And so that was the period we are talking about, when it was about compiling accounting information. That was the generation. That was the main thing people wanted from you. And there was everything was related to tax. So you had multiple tax files. One person would set up an HUF, mother's name, father's name. There were 100 files, and that was the practice. That was what a great practice was all about: compiling and moving information. And I must say, at that time, clients were also different. It was reverse planning of how much taxes you'll pay and therefore what will come into the finances. And then the generation changed. From there, we became, we started doing checks and controls. It's a different thing. Regulations were still weak, but we were understanding the importance of checks and controls. And foreign companies, the multinationals, were coming in. And then came in the period of specialization. Tax broke into advisory and litigation. That further broke into international. Each of these broke into international and domestic. And within international, it broke into transfer pricing, expatriate, corporate. So you see, each was breaking down, which is what is the current shape and structure. You look at assurance, broke into risk advisory, broke into financial accounting advisory, broke into due diligence, ESG, and it's continuously breaking down. So assurance, which is the starting point of audit, has broken into multiple areas which are specialized now. So specialization is great because it also helps you to tie up with fellow professionals and focus on niche areas. And that niche areas helps you to get better fee.
So if you have to start a CA firm, say today, okay, how would you start your practice? Assuming that you want to grow big, right on on India's wave right now, which is actually India is going in an upward direction. The world is looking at it in a different way.
So I mean, on a personal level, if you had asked me the question, if I was taken back in time, what I would do, I would do nothing different. I think I'm very satisfied with whatever God has brought in
Yeah.
my direction, my partner's direction. So that's a different question. But to answer your question, what if it was today I was to
Yeah.
start off? First of all, uh, I would probably not have started on my own at all, because now is a period of collaborations and uh, coming to, and the younger lot is much more entrepreneurial than at my time. So finding like-minded people to come and take risks together would have been an easier job, instead of hunting down the right partner and convincing them. You remember, I have partners down south also, and convincing them that this Punjabi out here is not going to con you. I mean business. So today's date, everybody is more attached to each other. Second thing I would have done differently would have been, I would have probably not looked at traditional areas. I would have looked at tax advisory more closely, ESG more closely, digital services more closely. I would have looked at a different set of services. And I think assurance, the audit area, I would have looked at it the most closely, because what we are feeling, the thing is, I've seen a lot of people say, let's not get into the test function because it's very high risk. Well, whatever is high risk ultimately develops into high money. And as lesser and lesser people get into this, and as Big Four also shed work which goes along because they cannot hold on to it forever, this area will become a huge practice area. All you have to do is define good system, invest into good processes, have knowledgeable people to do it, and expand audit in a big way. I think audit is a future opportunity, but this is something which is not going to go away. So this, I think, is an area which, so I would have played with all these cards if I was to get into it at this stage.
Concept of virtual CFO is taking over a regular practicing CA. So what's your take on it?
The practice itself must evolve. First of all, virtual CFO role uh, is a commoditized product. And the only thing which we bring value to the table is because now the CFOs are in short supply, and a client, in specifically in the mid segment and a small segment, needs good advice. So they are going to be, wanting these CFOs to CFO sort of a thing to help them. Now this is a one of the products. It's not going to take off your practice. You can decide that in your practice, you're going to embed this and you're going to hire retired CFOs to do it, or you're going to do a part of it yourself. But it's one of the products. You should treat it like a product. You should not be afraid that this is going to take over. Nothing can take over your practice. If your strength area is tax and your area is audit, play on that. But if you find somebody who's a retired CFO or somebody who is into this area more comfortable, take it on and offer it as a product. Practice areas are so differently spread that saying that something can take over your practice is means you're scared. And if you're scared, then don't be in the practice, because practice is a sort of a business. Keep on looking for changes and playing with ideas. Never stop. Till date, I'm playing with ideas.
Thinking to start a practice in a tier 2 city, fearing will this idea work or not, could not figure out step 1.
I will quote from a very famous saint, one of my favorite saints on this planet, who was in my era. I don't know if you've heard about this saint. He used to say in Hindi, "Jo dar gaya, samjho mar gaya,"
Yeah.
and that translates to whoever is scared is going to definitely die. And this was a saint called Gabbar, who from the movie Sholay. So I quote this very often. So I think first of all, if you want to get into practice, don't be worried. It's you are first of all, you are a CA. You're not going to starve. That's guaranteed. And if you don't experiment with your idea, you're going to starve your mind completely and your heart completely. You may not starve your stomach. So if Sandeep has this urge that he wants to get into practice, then he should jump into it with a clear idea of what I will do, what I want to do, whom I want to sell the idea, and what the way I'll expand, and jump into it. And jump with an intention of by burning your bridges behind this thing that I'll try it for 1.5 years, then I'll see this doesn't work. If you're scared, then get a partner who will take the fear out of you and just jump into it. And trust me, uh, it is nothing more than that. So the step one is first deciding I'll go for it with a clear plan. That's the step one. And then jumping into it is the step two. Step three, the market will teach you, and you will teach me one day what is the difference in today's market. First thing is throw the fear factor away. You are a chartered accountant. You will not fail. That is guaranteed. The intelligence is bestowed upon you.
When did you transition ASA into a professional services firm? Immediately, like how many years into the practice? And what is a professional services firm to a CA firm for those watching?
Yeah. So, well, in the wider sense, professional services firm, I mean, whether we are accountant or lawyers or architects, these are all professional services firm. I think what you're trying to say is from a traditional
Yeah.
accounting
Yeah.
outlook, you move across where consultancy, M&A, other aspects, ESG, all starts digital starts playing a role.
Yeah.
And I think in a the way we transited was like I told you, I was very clear about partnership. So I we had the traditional accounting partner what came in, tax was me, audit partner came in, and then as we went along, internal audit risk advisory started coming into play. And then as we went along, due diligence, business advisory, helping foreign companies set up, like that, insolvency started coming in. So I think it took us about 15, 20 years to move into a multidisciplinary practice. And it is expanding as we go because new talent comes, client needs are different, regulatory requirements change. You can't do conflict work. And therefore, if you can't do conflict work, then the teams get over specialized in an area. You need different teams. So these things happen in a logical way, but in today's world, this will not happen in the logical step by step method. If somebody was to get into the profession, he will go or he or she will go with the desire of breaking it down into what I will do and not do the starting point and what I will add right now. As I speak to you, I've been talking to a few younger professionals who have been telling me that they're going to carve out their attest function, or some are saying they were carving out our old commoditized product of accounting, and they're going to only focus on something to do with digital or ESG. And these are very highly specialized. The margins are very high. So some of them want to play on high margins. Some want to play on commoditized
Yep.
services where the you do volumes and you make out. So it can play both ways.
Okay. What is your closing message?
End of the day, it's professional services. And just like if you go to Bollywood, everybody runs to Bollywood. There's a huge opportunity, but only there is one Shah Rukh Khan or one Salman Khan or somebody like that. So people in the profession who will do well will be a few, but that doesn't mean that the others can't play. But if you know your playing field and you expand within that, you'll be happy. Will all of us end up buying large cars and Rolls Royce and farmhouses? I doubt it. But you will be wealthy enough to do well in life. Number two, unlike your peers who will move to the industry, and unless you are as silly as I am, you could retire at 75, you could continue longer, you could build this thing. Because remember, as a professional, your retirement age is what you decide. You can, even my partners who have retired from the practice have gone and set up their own things and continue to be professionally active. And that's a different thing from a person who goes to the industry. So he may be earning faster at the initial pace, but then he stops at 60. And then you got the wicket still going on. And you'll be invited to board of directors and other places. So, there is an advantage to get into practice. Only choose your services offering and choose your partners well and choose your target audience well. And I would any day recommend the kick of a practice. You talked about startups and unicorns. Trust me, the kick of building up a practice and taking it places and joining hands with wonderful people. Believe me, my passion towards practice is as strong as it was when I started 32 years back. I wouldn't switch places for anything. So I don't think anybody should plan such a retirement. Keep yourself mentally occupied. Otherwise, you're going to, what will you do with a mind which has been filled with so much knowledge? So I don't think so. I mean, I will I build up if I was to start, will I build up 1,000 crore practice? I don't know that part, but I would love to, and I would love to run for it, and I would keep running for it till that partners kick me out. So my answer is very simple. I enjoy the run. Bank balances growing is just a security wall for people who are scared. I would, if I had much more bank balance, I would invest into doing something more interesting in the practice. Take more risk as you go.